Yesterday, oil dropped to almost $110 per barrel, but today it has kicked off trading with a slight gains again. In effect, it was a purely technical rebound upon reaching the next psychological level. Nevertheless, a resumed decline in oil prices cannot be excluded. As for the next couple of days, the quotes will most likely continue to grow. This can be attributed to EU-Russia relations, which have become increasingly strained due to Moscow's demand for payment in rubles for gas deliveries to Europe. And this shift is due to come into effect on April 1st. If Europe refuses to pay off rubles and Russia cuts off gas supplies, energy prices in Europe will soar. This, in turn, will lead to a rise in global prices, including oil. However, given the ruble's impressive rally, European companies seem to be preparing to switch to paying for gas supplies in the Russian currency. Until then, oil is expected to continue its gradual growth. Signs of downside momentum will appear only after market participants are convinced that the delivery supply chain has returned to normal. Now let's take a look at the trading charts. Losses in Brent crude oil futures accelerated yesterday. As a result, the quote dropped to the area of $105 per barrel, but then saw a slight rebound due to oversold conditions. The downtrend will be broken only after the price consolidates above the 115 mark. Until then, there is a strong likelihood that the quote will continue its correction towards the psychological level of $100. Meanwhile, gold has been trading around $1,920 for the third day in a row. This is largely due to uncertainty over the upcoming transition to rubles for gas payment. Given that gold is still regarded as a safe haven asset, the metal is holding on the stable gains. Nevertheless, the asset is still vulnerable to sharp swings. In a worst-case scenario, which suggests halted gas supplies to Europe, gold will gain strong upside momentum. If the parties are able to find a compromise, the yellow metal may suffer losses. The ruble continues its bullish run. Today, the Russian currency kicked off the trading day below 85 rubles per dollar. The reason is surging demand for the ruble, although EU leaders have rejected Vladimir Putin's demand to pay for natural gas in rubles. European companies appear to be getting ready for a historic change in the energy market. After all, the European Union only recommended that energy companies not pay for gas in the Russian currency, but did not impose any restrictions. Moreover, Russia stated that in case of refusal to pay for Russian energy resources in rubles, it would stop gas deliveries. Thus, the ruble is expected to continue its upward movement. However, on Friday, it may show signs of a pullback, which will intensify on Monday. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you next time.